think we might have a little setup coming about. Market was going down, falling off hard, and now it's starting to rebound and go up. We're starting to see a little bit of an oversold territory here. So I'm kind of thinking of hopping in short and seeing if it bounces off this resistance level right here. A couple things to think about. Always look at your pip spread. If it's, if the volume is low, you can see your pip spread get high, and now all of a sudden it's a lot harder to trade. So I always kind of keep an eye on the pip spread. It's usually around 1.8. All right, I think I'm gonna hop in short with 10,000 units right here, and then we'll put a buy stop order up above it to protect it. So looks like we're getting into some overbought territory. Maybe it'll pull back off. So let's just see what happens. All right, so we're gonna sell right there. All right, we got in at 711, so 811, or I might even be just a little bit right in this area, because if it comes up and breaks through this resistance level right here, this is going to be the sticky spot. So I might start out just above that, and we are going to put 10,000 units right there for our buy stop. And let's see what happens right above that candle. See if we can't make a little money off this. Okay, while we're just sitting here watching the market, it's not doing a whole lot right now. I wanted to maybe go over some of the nuts and bolts of this layout. So again, the blue chart will be the long positions and the red chart will be the short positions. And we've opened up a 10,000 unit position on the short side. It's currently out of the money, negative 1.5 pips. So if we look down here on the bottom, I had a $500 account. It was just a little over 500 bucks. I think it was 502.50. We currently have a negative profit of a dollar 18, $1.26, because it's bouncing around. Oh, look, it's pulling back. We just went into the money, so now we're up a little bit. In order to open that position, I used $200 of margin, and I have $302.94 of available margin. The goal here, obviously, is for this to pull back and get profitable. Maybe we won't go for a full 30 pips on a clean trade. Maybe we'll close it out at 9 or 10. We'll kind of see what the market gives us. If it looks like it's going to continue on and move in this downtrend, we'll kind of hang on to it. If not, we'll take a nice little scalpy trade, pocket some cash, and live to fight another day. The main thing we need to make sure we're doing is we're balancing our hedge. We're protecting that position. So I opened up a 10,000 unit position here, and I want to make sure on the long side, I have a 10,000 unit position as a buy stop just to balance it. So if this market just sneezes and shoots straight up, you don't get caught losing a bunch of money. You have a backstop. And you can have that as tight as you want or as far out as you want, whatever your comfort level is. I often put it between 10 and 30 pips, depending on the movement in the market. I also tend to look for different support and resistance levels. So it made sense to have this just above this little shelf right here, but that's a personal preference. The bottom line is, in order for trimming the hedge to work, you do have to be balanced, and then you would trim it. So you have some protection out there, because you got to be protected. Got to have some protection. All right, so we're bouncing around break even. We're 0.3 pips in the money. It's kind of nice to see that maybe pulling back. If we could get, 10 or 15 or 30, maybe it'll sell right off and flush down into here, and we'll grab a 30 pip win. I have not put anything on the calculator yet. Here's the reason why. I only have one open position. So the idea would be, if this comes down here and closes and wins, then we don't have to do any hedging calculation. Uh, in fact, one of the things you can do if you want, you can even put a take profit. So let's say we wanted to do our take profit down here just below that bottom side, be about 20 pips, and you didn't want to sit here and monitor it, you can put a take profit in. That's totally fine, just as long as you know you're managing your buy stop. If it goes up and hits that buy stop, you'll definitely want to get rid of your take profit. Obviously, if you take profit and you close out the position, then make sure you close your buy stop order over here. If you don't want to start out with live money, you don't have to. In fact, I'd recommend practicing and developing your strategy, practicing hedging, practicing trimming the hedge, making sure you get the mechanics down before you jump in with real money. Even a small account of $500 or $1,000, you can lose it so quickly if you don't know what you're doing just by making a mistake, clicking the wrong button or something along those lines. I use FX replay. I still practice. I practice often. I'll jump in here, grab a year like 2020, January 2020, and just practice and work through the mechanics of setting up your trade, trimming your hedge, managing your calculator. If you are running a live account, it's not like you get dozens of trades every day. So it's really easy to hop onto FX replay and just practice, like shooting foul shots. It just makes it a ton easier when it's live. You're not quite so stressed out. I do have a coupon code. You don't have to use it, but if you want to use FX replay, the charting software is the same as I use for trading. So I use TradingView and they use TradingView charts. So it really does feel natural when I go to trade on the real account. So anyway, there's a coupon code down below if you're interested in using some FX or signing up for FX replay and just practicing. It was down right in this neck of the woods. I think we're like 6-7 pips in the money, and then it flashed up, and that is the reason why I'm a hedger. You just never know when the market is going to flash one way or the other. We still have our buy stop just above this shelf, which was only probably about what 20 total pips. Normally I push those between or closer to 30, to be honest with you, but I think that's kind of a natural spot. Maybe depending on how this market reacts through the sticky area, if it shows signs of stickiness, we'll leave it. If it's kind of just trucking right through that, we might push it up above this top side right here. We'll kind of watch it. I am going to go ahead and take off my my take profit, and here's the reason why. I'm not going to sit here and babysit this. I have my position set up. I know I'm protected. We have a buy stop order in if it moves up, and it'll hit it. And then we'll just get on to hedging and work from there. If it turns around and flushes back down, then we'll just see where it is here in a little bit. So took the take profit off, and we'll just kind of let this thing saute, if you will. Just simmer, lightly simmer there just a little bit. All right, it doesn't look like we're going to get this one closed out. I thought it would be fun if we could snag a clean trade in the first video back, but Mother Market had other plans. I thought maybe it would be fun to answer a question. I was reading back through the comments on the video, the last video, and this guy wrote, "Can you please let me know how you calculated that 12,500 max units you can trade?" Here's the deal. Everyone is going to be different on this. You're going to have different risk tolerance. You're going to have different leverage. Everything is different for everyone across the board. Here would be my advice. Start small. Start way less than what you think you have the risk tolerance for. and then build off that. You can always add in down the road. That's the beauty about hedging. Just because you have a position here and a position here, you're not locked to those. The idea of trimming the hedge is to get units back to put it back in closer to the market. You can always size up. I don't really have a perfect answer on that. I have a personal formula that I use that matches my risk tolerance and my leverage capacity. And I just kind of stick with that. And I've had it that way for, I mean, a long time. But I tweaked it a bunch at the beginning until I found a comfort zone for me. So, my thoughts around that: find what works for you.